Hey everyone, welcome back to the channel. Today we're going to be talking about the dividends I earned this last month, and it is pretty much right over here for us at the beginning, but we're going to talk a little bit more about this stock as well as where I'm kind of looking at with my investments while the market has kind of recovered to some degree in my portfolio and looking at opportunities and where I can put my money in the meantime. So right over here, you could see our dividends that we just recently earned. We actually got a special dividend from Costco. So Costco every couple of years has more recently been giving out a special dividend, even though their regular dividend payouts are on a quarterly basis and they're relatively small yield because of how high the price of the stock is. You could see this right over here is $233.74 back in the middle of January. And so first off, I want to make sure that if you also got some dividends from Costco, let me know in the comments down below. I'd like to hear how much you made from this special dividend. They were giving out $15 per share as of their ex-dividend date, which is a pretty great amount of dividends to have received all at once. So that's really great. I did, of course, reinvest this back into the portfolio. So I'm actually a little bit off screen here. So let me make sure that I can show you right over here. So if I go back to my overall portfolio here, so this is on N1 Finance. If you haven't been following along yet, this is where I keep my taxable account. Right now, even though we are dividend dentists, we're looking at long-term dividends down the road. So even though Costco paid us a nice dividend, obviously, like I said, their yield is relatively small. So if we go over here, we can see we currently have 15.582 shares of Costco. Their current dividend yield is somewhere around like 0.6%. So fairly low as far as overall dividend payouts. Obviously, there are companies that pay out much higher yields. We're not currently in the need of the dividends. So for us, our goal is just to be able to accumulate these companies that are paying dividends or going to have nice growth. So when we do want dividends, we can sell off the growth and pay into companies that are having nice yields. So you can see right now the current cost of Costco is $687. So it's a little bit too rich for us when it comes to buying more into the company. But you could see our overall here for this company has been really nice, even though it's been a smaller amount. Obviously, if we could have put in a little bit more, it would have been great. But we're currently sitting about a valuation of $10,700 with a total gain of $4,000. So based off of when we put everything in, you could see our actual all-time return is 200%, but that again is just based off of when we put the money in, all that growth that happened, plus the dividends that we've earned. Because on top of that special dividend, we've gotten one before a couple of years ago, and then the quarterly dividends has come out to $347 in total. So what I also like to do too is I have a dividend income tracker where I actually just be able to plug in the amount of dividends I earn every single quarter. And so for this right over here, I'm going to actually zoom in just a little bit here for us. So we can see here, this is something I put together. And if you actually do want a copy of this, it's completely free. I'll have a link in the show notes down below. Toss in your email and we'll have that sent over to you. And what this will do for you is just allow you to plug in where you are every single month, and you can kind of have a good idea overview of what all your income looks like. Because most dividend trackers, they actually just kind of track the actual dividends as far as the companies themselves, the safety scores. This actually just keeps track of the dollar amount. So you can see here for January of 2024, we put that $233.74 in. Now, when we compare that to the previous Januaries, you can see this is a massive increase because this was a special dividend. It's not the common ones. For us, actually, this would have been at $0 if they had not paid out. So that's a huge, great start to 2024's dividends, because if we look at where we are last year for Q1 of 2023, we ended that quarter at $324.95. So we are well ahead of where we typically would be, with, of course, 2 more quarters, February and March, being added in total. So right now, this is just comparing quarter over quarter. So that's totally fine. And then this is comparing our overall year. So this is, again, a really good start to the entire year. Of course, we're going to be filling this out, so make sure you are subscribed so that way you can keep on learning about this process, seeing how this whole overall portfolio grows when it comes to their dividends. Because I love looking, like I said, especially for like February, for example, whatever we end up with, we can compare it to last year, the year before that, and just see that incremental increase happening over time and how impactful that this compounding effect really has on us by having these numbers available for us, which is going to be a really great thing. So like I mentioned, if you want to get this dividend income tracker, go ahead and check out the link down below in the show notes. I'll also have resources to everything else as well that we looked at and talked about here today as well too. Now I mentioned as well too that we actually right now are looking pretty solid across the board with our overall portfolio here. And sometimes that can be a little difficult because when we are performing pretty well across the board, and we go to our unrealized gains here, we can see, oops, there we go, right over here, all of our stocks, not including dividends that got paid out, are actually in the green. And obviously that's a good thing for the majority of, the investment, while also seeing that there's not as much opportunity like there was in 2022 and some parts of 2023. So it becomes a little bit more less likely for us to invest larger sums of money. So we're going to hold back a little bit on what we're currently investing in. So we're going to put in smaller dollar amounts while considering if, some of these companies that are maybe performing the least best, I guess you could say, are the ones that we want to put money into. So like if we're wanting to continue to do a little bit more now in Texas Instrument and Airbnb, Discover just had a huge drop this last day because of their Q4 reporting. So we're going to consider, is that a company we want to keep investing in with this price point if there's opportunities? So we'll kind of look into that and see if that's the route we want to take. Otherwise, we kind of just slow down as a whole, but still want to invest a little bit at a time. Just because there's all-time highs doesn't mean we want to don't want to invest nothing. We still want to put in, if we could, like $100, $200 in a week. Obviously, when the market is pretty red, I have a tendency to want to invest more. So that way we have more opportunities to buy, if possible, below our average price points. So pretty much everything right now that we're buying is increasing our average price because we're paying for them higher than the price point that we started with, which is okay when it's, at a reasonable increase. But like, for example, Meta and Microsoft and Costco, like we obviously were looking at the dividends, it's becoming increasingly difficult to be investing that much more into these companies when they are hitting their all-time highs, even though some of them might still be at a good price point. So like Meta has been relatively at a good PE ratio to be able to still be investing with, while things like Costco has started becoming a little bit, like I said earlier, a little bit too rich for the investment at the moment. So I'll hopefully look for a little bit of a dip and then be able to start buying more into Costco, as I would want to continue to build up the amount of shares that I have with the company. Now, if you're curious to see all of the companies that we have in this portfolio and kind of dive in a little bit deeper, I'll put my video right up here on screen so you can actually see how we did for all of 2023 and its performance.